What up, everybody? What up, everybody? It's your boy J Trades Universe. So I just wanted to take you guys through some of my favorite pairs. As you can see here, these are the pairs that are in my watch list. So what I normally analyze, I analyze them the DXY because of I am a dollar trader, right? So I trade these three beautiful pairs, which is Euro USD, Pound US dollar, and Aussie to the dollar. But because of the DXY, actually basically guides everybody in towards understanding what's happening with the dollar pairs. So whether you trade anything that's related to the dollar, even USD ZAR, to all those that trade USD ZAR, make sure that you start analyzing your dollar first, right? Your dollar index first, which is actually it's being called the DXY, right? So I'm just going to take a few minutes just to take you through my analysis for the euro dollar, share with you guys what I'm looking at, the kind of trades that I'm looking to take, the directional bias of the market, where the market is likely, where I'm actually anticipating the market will go, um, and what I'm looking to actually, the kind of trades that I'm actually looking at, right? Before I mess up my chart, guys, let's get into the real business of, why I am actually sharing this analysis, right? Make sure to also, guys, make sure to also go to my YouTube channel, subscribe to my YouTube channel because of all the content that I'm dropping. I'm dropping to educate. I'm dropping for people to actually understand. That forex is not a scam, but I think we're beyond that. Most people who actually trade forex, they understand that forex is not a scam. Forex actually works, it changes lives, but it needs a form of consistency, right? So click the subscribe button, like the content. If you like the content, please do give a comment to say, Jay, look at these kind of pairs. I do not trade anything besides euro dollar, pound dollar, and Aussie dollar. But if you want me to analyze any kind of pair, right? Be it as Nasdaq. I used to trade Nasdaq, but I had a terrible experience trading Nasdaq. I'm not gonna lie. I can analyze and upload it so you guys can actually use what you pick, the skills that you actually learn from some of my analysis, right? Let's jump into the charts, guys. Let's jump into the charts. Yes, so what I was looking at, guys, I was looking at, as you could see, that the directional bias of the market, or the structural bias of the market, right? The market has been pushing towards the down, right? So we basically have a downtrend, so a downtrend is a market that's pushing towards the down. So you know that the market pushes towards the down is called a downtrend, right? Then it pushes towards the highs, which is an uptrend, and you have a sideways moving trend that's not giving proper structure. So in that market, you don't know where the market is going. So then what I also did is I started going, because of, you could see where the current market point is. That's where you normally have to, most traders normally focus on. They focus on this area here, right? Because of, we using the daily time frame, right? So you want to focus where the market is playing, where the market has been recently paying, but you want to look at the overall structure. For how many months has the market been pushing towards the down? Because of, you can see now, you get an overview of how many sellers are actually in the market, the pressure, even the kind of candles, because of, you already understand the structure. So the kind of candles that you want to be looking for, and if you're a scalper, what kind of opportunities are you looking to capitalize on, and if you're a swinger, which kind of direction do you want to actually go for, and how patient must you be for the market to kind of give the right type of confluences. Remember, guys, we don't choose what the market do. The trend is your friend. I remember when I started learning when I was learning forex, and I was told that the trend is your friend. So you follow the trend. You don't divert or go against the market. You go against the market, you lose. We know how it works, right? So as you can see here, that the directional bias of the market is towards the low, and the market has been consistently making lower lows and lower highs. As you could see here, the market has created a low, retested, created a high, which is called the lower high. The market broke the level to create another form of lower low, push towards the upside, create a lower high, break the level. You see how easy it is. You see how easy it is. Then what I did secondly is highlight my major support levels and major resistance levels, which are actually key levels for us to actually understand where the market goes, and support. This is where the market, these are psychological key levels, because of the zeros, right? The market uses notable points, 110, 1.5, 1.7, to actually respect the areas. It can respect the areas in between, but normally it likes to read the candles when the market gets to a psychological key area, right? So I highlighted somewhere support 10 resistance, some resistance 10 support. As you can see, one thing I want you guys to note is I'm still on the daily time frame, right? So the daily time frame, you get one candle that actually represents the entire flow of the market throughout the day. That's the daily time frame. That's the daily time frame. Okay, so now then we go and we analyze 240 minutes of the market, which is the 4 hourly time frame, right? So this is the 4 hour time frame. So as you could see here, that where the current market is, and the structural bias of the market, we have said the market is in a downtrend. So most of them, the participant of the market are actually sellers, and the sellers have been holding good sales, and they've been winning the market. But you could see here that the market has actually created some form of a key support level, came back, retested the level, and pushed towards the upside substantially. Because of course, yeah, you have a double bottom that actually confirms that this is a major support area. Then the market shot up. But now the market that is coming down, we are expecting two things. Remember, guys, we don't control what the market does. So the market might come here to retest the level, or the market might come here to break the level, turn this area into a resistance and push towards the downside. Why? Because of the market is in a downtrend. Or the market can come here, let me just use this. The market can come here, so sorry guys, let's use this. The market can come here. What am I doing? The market can come here, right, and respect the area, maybe just play here a bit and push towards the upside to actually make sure that is retesting this area, maybe break the area, maybe fail to break the area, and because of the market has to decide. But whether the market is going to come here, break the area, break the level, or break the zone where the market is, right, it's up to the market, right? But we'll know which decision to take looking at the right candlesticks, whether we're getting bullish engulfing, bearish engulfing candlesticks, break of structure, continuation, or all those forms of confluences. We're gonna be looking for those kind of confluences in this key area if the market comes here, because of it looks like the market is actually returning to what's that structure. But my highest probability, right, towards this market is when the market will get to this area here, I'm gonna be looking for buys. I'm gonna be looking for buys. So guys, I'm gonna end up the video here by saying that, whenever you participate or trade in the market, remember that the most important thing to first, don't look for one confluence. Read the candlesticks, understand your dojis, understand your bullish engulfing, understand the momentum of the candlesticks, understand your key support areas, your key resistance areas, understand the market structure, understand your trends. If you are using such a strategy like a trends in trends strategy, make sure that you are reading the right types of things. Do not make up things in your mind that the market is not giving to you. Read the market as it is, right? Read the directional bias or the structural bias. I like to call it a structural bias because of it means the market has decided the actual overall direction, right? Then you can follow the trend, right? If you are seeing a certain pattern that is actually recognizable, like a double bottom, a double top, a head and shoulder, an inverted head and shoulder, a cup, or any form of pattern that you actually use, but it should be recognizable, right? Then you are able to spot opportunities to trade. The key is to trade in the right areas and grow your account instead of blowing and having to refund. Hope you enjoyed the video, guys. Remember to click the subscribe button for more content. Also notify me on what to drop. But as I have mentioned, that I only focus on currencies, right? Everybody wants to have a form of a niche, right, in the market. So my urge, my niche, and what I want to dominate the market trading is only these 3 or 5 US dollar pairs. Thank you so much. Bye.